if I do this is the cost. जिससे भी जल्द उठना पड़ेगा, ये करना पड़ेगा, वो करना पड़ेगा. I asked the उल्टा question. What is the cost if you don't do this? भाई मेरे फादर ने तो 10 शोरूम ले रखे हैं. There is a rental of 40 lakhs a month and is very happy. But what you are saying is doesn't make sense. One thing I must tell you that when we talk about education, don't unnecessarily get influenced by the influencers.
Hello and welcome to today's podcast episode by StreetXperts powered by Mastertrust. Where we break down the world of finance, trading and investing with industry leaders who've seen it all. I'm your host and couldn't be more excited about my today's topic. Something that every retail trader and investor thinks about. Why most retail traders and investors lose money. The harsh truth. To help us uncover the realities of trading and investing, we have with us a visionary leader with over 3 decades of experience in capital markets and corporate finance. Our guest today is Mr. Gurmeet Singh Chawla, Managing Director of Master Portfolio Services Limited, an engineer and MBA by qualification. He has over 30 years of expertise in capital markets and runs the portfolio management vertical for the group. His experience spans across corporate finance, business management, and IT system solutions. Beyond business, he is an angel investor, philanthropist, and actively supports various NGOs. Sir, we are delighted to have you with us today. Thank you so much.
Thank you, New, for inviting me for the show.
So, sir, today's retail investor is in a very different world compared to a decade ago. With just a smartphone and a few taps, anyone can open a trading account, get live data, start investing within minutes. The easy access has also created overconfidence, a get-rich-quick mindset, and in many cases, heavy passes. The truth is, while more people are entering the Indian stock market ever than before, more retail traders and investors still end up losing money. So, the big question is, why does this happen in 2025 when there is so much data, so much transparency, and there is so much information available, still like retail investors entering the market are losing money?
See, markets have always been like this, right? It's nothing has changed. Market is giving loss to some and profit to some, right?
Yeah.
The factors behind remain same. It's basically human nature, psychology. Only the tools have changed. So I wouldn't really say that things have changed from 2025. The approach has to be adapted to the tools that are available, but the man behind it matters more.
Yeah. So, sir, what do you think are like the biggest mistakes which people today are making?
See, if you're looking at, you said you talk about traders, right?
Yeah.
A trader by definition is not an investor. So let's first iron out the difference between trader and the investor.
Yes.
Trader is a short-time player, wants money in couple of minutes, hours, weeks, not beyond that.
Yeah.
Investor, he wants to accumulate wealth for a long period. So it goes for months, years, and there is a plan behind that. There is a small tactic and strategy for a trader who wants to do it for a short time, right? Now the mindset is different, the approach is different, tools are different, outcome will be different.
Yes.
The risks are much higher in trading than in investing, because investing is long term. There's a lot of corrective action you can take. In short term, you cannot. Let's compare two drivers. I mean, people learn driving, and one is driving only from office to home, and one wants to be a F1 player, champion. So the training is totally different, right? If somebody is not even driving on the highway and wants to drive on the highway first day, he will be very nervous. But somebody wants to still beat the other traffic on the highway and be the fastest, he will lose control, there will be accident, the chances are very high. Same with the trader. Before you take questions forward, I'll give you an analogy.
Yes.
This question is many times asked to us that who are the winners and who are losers, since we are in markets and people have been trading with us. So my simple answer to them is that markets like oceans. They offer so many opportunities, but they are not for all. each opportunity is for different individual. For example, you just want to go and have a good evening at the beach. So you are there and you wet your feet and come back. You're very happy.
Yeah.
But if you decide you want to go surfing, you want to go swimming, and you don't know, there will be an accident. Suppose you are prepared to be going for surfing, you are prepared to go for swimming, then you're prepared and you do that. You're not happy with wetting your feet there.
Yeah.
Similarly, there are opportunities on high seas, deep diving, so many opportunities, right? Markets are the same. If you are not a player, you don't know how to do it, just sit on the sidelines and watch. Now, watching itself is player, right?
Yeah.
Now, when you watch your advisor invest for you, and you are just watching, it's good plan for you.
Yes.
If you know what you want to do, and you have practiced and you know the risk involved, then you are improving day by day and you can become a champion tomorrow. The other analogy I'll give you here is because I think that is the topic for the day.
Yes,
So
yes.
two things. One is how many people qualify to be IAS officers or IFS officers? What percentage of people? What percentage of people get into IIT, IIM? What percentage of people are outside success in any trade or business, right?
Yeah.
It's in fractions. It's not even 1%. It's 0.1, 0.2, 0.3. How do we feel as a trader or investor on the first day that we can be champions, we can be winners without any training, hard work, intelligence or preparation, right?
Yeah.
So bear in mind that success rate in any business remains same. Percentage of success, outstanding, moderate,
In
less
any
than moderate
business.
and failure remain the same in any business.
Okay.
Be it, now comes the question whether your the person is looking at this as a business or pastime or just for quick money, right?
Yeah.
If it is a business mindset, he's a different lot. He's a different category. If he is only a casual, you want to lose. It's only heads and tails for you. Sometime you win, sometime you lose. That's a luck. Regg's luck says that you will win first and they'll lose later. And that happens to most of the traders and investors.
Okay. So basically, it's the technique, the knowledge,
It's
and
the
your goal.
It's the mindset
Yeah.
and the objective.
Mindset and the object.
And then how you build on that knowledge, either directly or indirectly. You hire a good advisor, so that's an indirect thing. But you
Yes.
also with the knowledge to how to question the advisor, how to talk to them, how to get maximum from them, and also how to tell about yourself to the advisor. That communication is very important.
Great, sir. That's something which is will be quite helpful for people listening to us today. So, if you had to narrow it down to 2-3 habits which you can specifically name that people do lose money if they're going to follow these habits, what would they be? If you've seen some consistent pattern.
I mean, if you just want, one is recklessness, restlessness. Don't have to. You're not even willing to wait for a day. You want to make money in half an hour.
Yes.
You go against the wind. You know that, but you are so addictive to trading that you still want to trade on a bad day.
Yeah.
People make mistakes. You don't have enough margin to carry on the positions. You are not trained, right? So I think it is that pressure that you can handle, and you can balance between greed and fear. That's that's how it markets. I mean, either you give it on because of greed or because of fear. So you have to balance that. I mean, if you're not a balanced person, then you will lose money, right? First, training, resource. When I say psychological training, it's all you're not falling into trap of a FOMO, right? You have to have your own conviction and follow that. If you're following somebody else, then you lose money because he will only tell you when to enter, not to exit. Right? If you have an advisor, as I said earlier, then you know he will advise you both sides. Yeah.
So, just a question related to this. Does it differ to the different age groups also, or is it just how we spoke about that if you have a different objective like business or retail?
No. Two things. One, you said why 25 and you were saying age. I'll put both together and answer that. One is the people who are now born after 2000, right? The new generation. They are used to different tools, different way of working. It's not only on trading, but any field. All food is on apps.
Yeah.
But so I'll put the categories as 20 to 30, 30 to 40, 40 to 50 and 50 beyond.
Sure.
These are the 5 different categories we can put people in different age slabs. Now, if you look at how knowledge and technology has evolved over a period of time, generally, there is a gap, right?
Yeah.
So people who are beyond 50, one, they'll have wealth.
Yes.
So whatever they've done in the markets, either they have done good, bad, whatever, but they have some wealth and they want to grow that, and they're looking at their retirement and meeting the last obligation of their family.
Yeah.
So they'll have more tolerance, more patience and more planning, maybe more educated. There are some who start very late and still lose money, but they are very careful not to lose 100% money.
Yeah.
Because the risk taking capacity is still lower. It is inherent.
Yes.
Now, 40 to 50 are still working, they are accumulating wealth, they know how to do it. Somebody is trading, somebody is not trading, but they are serious in their careers, right? Business or career, so they don't have lesser time also. So they will take some help from outsiders, all tools, but mature decision making.
Yeah.
30 to 40 is where they've started accumulating money, they've started understanding the responsibilities like family, children. So they also don't tend to put everything on the table. Yes. They have, but they don't want to. And somebody has told them, trained them to go for goal planning and plan longer. Now the best and exciting part is 20 to 30, that is the majority of the population.
Yeah.
These people have little money. They either they get their pocket money or they borrow or they whatever they do, and they feel that this is experimental money, so let me burn that if it happens. It's okay. All these demat accounts that opened in COVID, especially younger age, their ticket size or the margin was not more than 1 lakh. Okay. Small savings here, there, some jobs and nothing to do. Some tried because of no employment. Some tried because they had some money, nothing to do, to learn the art.
Yes.
So this is high risk money which comes. So these people are more likely to lose faster and go out of the market also, because they know money available to them.
Yeah.
Now, some people will learn and they will grow, but they will also lose money. It is never win-win-win. It's 70-30 at best, 60-40 with most. This is how every trade goes. Yeah.
So basically, like, you need to have that knowledge. Like when you're saying that this generation had entered the market during COVID, so it was just experimental, nothing with a goal or a mindset or objective.
Yes, I mean, even if you go now and see what's happening in the gaming sector, that law has been passed that gaming is not right, and you could have no money on the table, but otherwise games. That was very important. I think in the last couple of months or years, the regulators and government have understood that the youngsters are losing money more than others, and they're borrowing and they're losing. There are personal loans, their credit card overdrafts, right? And they're losing money. So they want to curb all that through all the regulations on derivatives, or now crypto. They will not releasing crypto because of that only. A lot of people already losing money in crypto.
Yes.
And also gaming. So I think that tendency to trade and become a hero overnight or make a lot of money overnight has to be curbed. It's a natural instinct for a youngster, and especially if he has tools, he has access, and he doesn't go anywhere, just sit at home. And it's not only boys, let me tell you, it's girls as well.
Yeah. Okay, thank you, sir. Okay, so we'll move on to the next question then, and we'll talk about intraday trading. So, sir, is intraday trading truly like a reality, or is it a trap?
No. See, intraday trading, we used to call it jobbing, intraday jobbing, when derivatives were not there. Derivatives came, it became more prevalent, It's real business. We have clients, as I said, who take this as a business. I'm not really saying that it is true for a youngster 20 years old, but they were fairly young, maybe late 20s or early 30s.
Okay.
In 2002-03, when derivatives came in, they started trading with us, or earlier they were trading on cash intraday. They have, again, 70-30 ratio or 80-20 ratio of winning losing. They have made money consistently, but they are business person. They are more serious than us, service providers. They prepare themselves for the next day. They know what has happened. They know the entire markets, world markets, what they've done, how will it impact. So they have over a period of time learned the correlations between various factors. So intraday trading is not about the company. It's about their technicals, right?
Yeah.
Some news do affect, but normally it's the momentum, it's the indicators on the charts which help people. It's a reality. People make huge money on this, but again, train people.
So, sir, when retail investors, again, we're talking about them. So, when they overestimate their chance that they can make money in the short term and just go, is that right?
See,
That approach?
here we are defining retail as not trained, not very serious, casual. I would like that. No? As I said earlier, I mean, they are bound to lose money because they cannot understand the correlation of so many factors. They don't understand charts. Some people use, some don't. Some use only convictions. I have seen very good traders who only use volume or the momentum or the closing. So one or two things. But then sometimes you feel that it can go on and on and on, but there is a one day which is called 365th day. 364 days it would be right, but that would be really bad day for you because you're putting all the gains there. One mistake people do is they put all the money back again in the trading.
Okay.
Putting as investment is advised, but as trading is not advised. You start with one margin, you take all the profits if you have, trade with that only, and for every trade, fix your stop loss.
Yes, stop loss.
2-3%. If that discipline you can maintain, you can fine tune that, then you will not lose money.
Yeah.
Every trade, I'm not saying capital, I'm saying every trade.
Yes.
There are a lot of people who have learned it over a period of time, and there are geniuses, all people from very good institutes. They have now understood this, that yes, we have to square off our trades going against us within 2-3% of the that trade itself, capital employed in the trade, not the entire risk you take.
Yeah.
And many people don't. They say that 10% of capital, 10% capital too much for a day trader.
Yes. So basically that mindset has to be there that you're trading and not investing.
It's part of your
Yes.
training your mind that how will I control?
Yeah.
So what tools I will use to do that? That's the next step.
So then stop loss, putting a stop loss is a must.
Yes.
Yes. Is it like somebody who's in this background, in the finance background, can be successful in trading because they've heard about all this, they have the knowledge? Is it like that ratio is there that, okay, he's from this or she's from this background, so probably they'll be very successful in this area?
Theoretically, they have an advantage, but not really advantage because I said that psychology plays, your intellect reflects, your IQ plays a higher role as a trader. Intraday trader, than your qualifications or this, because this can be learned.
Yeah.
It's not like fundamental or research or long term that you want to do all that yourself. You just want to understand one or two factors and you want to trade on that. People live whole life on one or two things, but they're disciplined. So most important is discipline and train yourself about stop loss, not get into, not copy somebody else, not get into fear, don't panic. If you're able to do that and you are wanting to do only this as a career, then you can be trained and you can do that.
So,
and it's not necessary that you're from finance background, but you have to learn this. So all the professionals who are advocates, doctors, engineers, a lot of people trade from their office, they're not from finance background.
yeah.
But they learn as they go because one is that everything is available on the net today. There are classes which happen by professionals also who are qualified. NSM qualified, they train people, and this is a big business, and people do that process. Some people don't want to do that. One thing I must tell you that when we talk about education, don't unnecessarily get influenced by the influencers. There is a lot of damage that done by these people, some of them, because they try to manipulate the market through their advisory, which is camouflaged under the garb of their training. Not all, but some are there. So anybody who's trading should not only listen to an influencer, they should understand some basics that, okay, these two things I will try. If it doesn't work, I'll stop. Yeah.
Because eventually, if you're listening to influencers who are just giving you that, that clickbait knowledge and everything, then it's eventually going to land you somewhere.
See, everybody is there with a different objective and means to end. Now, means to end matters to us a lot. Some people are in quick money, so they are misguiding the students, right?
So probably, sir, that discipline and that knowledge is only, the differentiating factor between a winner and loser. I mean, like the people who are actually doing good at it.
Sometimes luck also plays a role because something comes out of the blue
Yeah.
right? So you lose money, but then if your discipline is there not to lose more than 2%, 3% of a trade, then you're still fine.
So yes, always put a stop loss then. Yeah. With the rise of algo trading, there are mobile apps, instant access. So has all this instant, quick information, quick access made these retail investors vulnerable, or like have they benefit them?
Both.
Both.
See, what is algo trading? Algo trading gives you couple of advantages. One, opportunity discovery, which you can't do with naked eye. Suppose I want to do a divergence strategy, but I can't understand which companies are best suited for my trade. Opportunity discovery is one. Second is that you can define the risk. We were talking about stop loss.
Yeah,
I mean,
yeah.
here we come to a system or an algo. It can be put into the strategy itself. Third is that you can define your profits or elongated profits. Right? You can define the strategy that if so much is the payoff, then we continue or we move off. Because selling at the right time is also important on the profit side also. Obviously, when you're against, the trade is against you, you have to spare off. Then the efficiency of execution is also enhanced. What I mean is, suppose you tell your strategy that I want to buy this share, but I know this share doesn't remain static whole day.
Yeah.
On a 100 rupees share, 20 paisa up and down is always there. So it oscillates like that. No? So if you are able to fine tune and buy at the lowest and sell at the highest, the 20 paisa, all the transaction cost is met. So your profitability goes up. It's very small things, right?
Yeah.
So one is discipline. Your
Yes.
free greed goes out because emotions are not there. It's part of the. Second is entry point is decided. Opportunities are there. You can choose between the opportunities, and you can also program to choose itself.
Yes.
So you have more time for yourself and just observe, not intervene, right? So algo is a very good thing. How people use it is different, right? Now, if you have your own strategy and you have not back tested it properly or it's not been tested for a longer period, there may be an opportunity when you have not, right?
Yes.
So we always advise people that you still go with all risk parameters fixed. Don't take an open position, make it a hedge position. And this is how people are learning. And this is, if youngsters are, or anybody who's a beginner or a retail, as you say, wants to get into, we advocate that please go through some strategy, some algo,
Yeah.
see the results, talk to the strategist or the person who's advising you to do that, understand and then start. And start with smaller capital and then you build that capital.
So that is where the
Now,
benefit.
these tools are all
Yeah.
beneficial. They are
Yes.
to help you because they're available to you.
Yeah.
Like if we say I don't want to use ChatGPT today, I mean then it's your problem.
Yeah.
Everything is available. Why do you want to tell your secretary to do that for you or your team to do that? Go beyond that. No? So all the tools are there to help you, and all good, decent broking platforms like ours are offering you a number of opportunities and also opportunities that you can customize your and give it to us, and we can get it approved in your name, our name, and you can use it. And there are now circulars from SEBI and NSE that we can also go for STPI integration, and third-party intellects can get their strategies approved and plug with this and trade. So all this is happening and it is good.
Yeah.
Yeah.
So, sir, you spoke about ChatGPT, so it reminded me of AI, and a lot of mental traps happening on the other side, be it greed or we heard somebody that has made so much money in the stock market, so we are also investing. So AI playing that role, because we know it's beneficial, but then it has a lot of two sides to the coin. So something you would like to.
No, I think when we are talking of back testing, and we're talking of back testing with a lot of data points and for a longer period, that's what machine learning is. That's what the strategy learning, I would say, that we have fine-tuned and learned from the previous this thing. And so any eventuality comes, we know how the strategy will behave. The strategy can be very simple, it could be very complicated. I mean, single leg, 2 leg, 3 leg, 4 leg strategies are very common. Now, complexities, when we are working with complex system, this intelligence with machine learning brings into the system is very important, and that's being used, that's being consumed.
Yeah.
It's not that now there is a high, we talking about AI at each step, each process, but all those automations that have happened anywhere in the industry or any industry, they're already using AI.
Okay.
Yeah.
Since you are a portfolio management expert I can say, if I can say that. So, sir, how do you think that the approach you would put in, or somebody who is actually an expert in this field, differ from the approach of somebody else, like of a retail investor? Like when you talk about portfolio management, how is it that different?
See, one, as a portfolio manager, I'm not a trader, right?
Yeah.
Neither we are allowed
Yes.
as a portfolio manager to use derivatives as the products to invest in. Second, I now used the word retailer,
Yeah.
retail investor, not a trader.
Yeah.
So, a retail investor again, for people to understand it and understand the process, we have coined this whole approach of our company as portfolio approach to stress-free wealth creation.
Yes.
So the objective is creating wealth through a portfolio approach and making stress-free for the customer.
Yeah.
Now here the advisor comes into play, right? Now, if you are going to do your own investments and learn and do it, still it should not be a burden on you, and the objective should be long-term wealth creation.
Yeah.
So if there is an investor, maybe he's a retail investor, today we want even the lowest level employee in every company to be a retail investor. Say 500 rupees, 1000 rupees put into the SAP and grow for its long-term goals, whichever goals, right? We understand the power of compounding. You put
Yes.
5,000 rupees for 35 years, from
Yes.
25 age
It
to
changes
60, you
too.
make 5.5 crores.
Yeah.
And you only put in 21 lakhs, right?
Yes.
But you start late, you're 35 and you put for 25 years, you invest 45 lakhs, put 4.5 lakhs, 4.5
Yeah,
crores.
yeah.
So that's the power of compounding, and that's need to be taught everybody. Why it's also required is because when you're looking at the other options, which are defensive options, they are giving you, like FD gives you return and there's a minus the inflation and the taxation, you are at par or negative.
Yeah.
So where does the money go? So all these people have to come. So when you say retail investors should not be put away from the market. Retail should be invited into the market as investors and not into the capital market directly through the mutual fund route. And that's very important. Otherwise the people will suffer long term because they will not have enough money to meet the goals. Inflation is going to be there, right?
Yeah.
For every goal the inflation is different. If you look at medical, the inflation is different. For your education it's different. For your living is different. So people just say no, 3-4%. ऐसा नहीं होता है. 3-4% inflation नहीं है. For certain things it's 10%, 15%. Overseas
Yes.
travel,
Yes.
your overseas education, your housing, your aspirations have gone up. So that probably property will be built at a much higher rate per square feet as when we say today. So I think that planning has to come. Retail have to come as investors, not as traders, and with goal planning, and then slowly they can start taking a risk if they want on some money, if there is surplus, or they want to make it as a profession.
Yeah.
So the approach has to be business-like. Even if you're putting only 1 hour into the markets, only 1 lakh as capital, but if the approach is casual, you should be losing money.
Yes.
Not that you will lose, you should be losing money because you're casual. You cannot even pass the exam if you're not serious, right? I mean, you have to put an effort. So many times I ask people that somebody is done a CA or a PhD, how much time you spent, are you an expert on a subject? No, I'm learning on the job. So how can you be expert in something you're not even trained on?
Yeah.
Right? So even you know the basics. Everything is available today. All education, the tools are available nationally, internationally. The regulators are, I think we have the best regulator, best platforms that we work on in India. And we have a huge potential. And all these youngsters, even you, people like you, we envy because the opportunity is going to be 10x every 10 years. But who will lose? Again, the same percentage will lose.
Yeah.
And people, if they come through that route of investing, learn the art, grow, and then some, they want to trade, they want to buy their own pick stocks, favorite stocks, please do that. 5-10% of your liquid portfolio, if it is that, it's okay. And you want to experiment, it's okay. But many people have learned. There are qualified, not working women. They have started doing it, investing, even teaching how to invest, maybe trading, and they're making good money. At least not working for 20, 30, 40,000 anymore. Don't travel 2-3 hours a day. Sit home and attend to their parents, in-laws, children. Doing both and spend 2-3 hours in the market. They are also watching TV now more often for news, not for gossip. And they're enhancing their personality, their knowledge, everything. So I think people who retire early from services, again, very good opportunity. It's not as only as investors, but also as practitioners, as business people, as we call them business associates with us or a referral associate with us. And they can talk about the financial literacy, help how the process is done, and people can make money, and it is going to be annuity money for a long time. This process we can explain in any other interview. If you have with me, we can explain the entire process. And it's working fine. And for anybody who is a good advisor, if the means to end is honesty and he cares for the capital of the investor, he can never fail. It's a lifetime annuity, huge money he can make without cheating anybody. So pure and growing business, and it's going to 10x 10 years, every 10 years.
And so, of course, we are drifting from the topic, but then when you say magic of compounding, when you say people should learn the art and, investors should actually be there, that they learn this and they, try to build their portfolio, try to invest, actually do SIPs or through the magic of compounding. I read an article and it said that people are spending a lot more than they earn, or the amount they earn they are spending, and the spending patterns have literally increased, be it inflation, be it whatever is going on in the market, and the percentage of investors is still less compared to the spending patterns. So what would you want to say?
No, I think you've raised a very important question here, because probably this will go to the retail investors who would be interested in listening to, if at all. Retail investor should be given a tool like a calculator or an Excel sheet. If you have not spent this money on a pizza, it would have become so much in 2 years, 3 years, 5 years. Repeatedly educating them will change their habit, right? Second is that mindful of the goals of life. People are not married, 2 generations, 3 generations, we accumulated properties, right? I think there is a business within the family. They don't need to work. Many of them, if they are able to only do the asset management and review the portfolio and change the asset classes, churn the asset classes, why I say so. On any block of 20 years, there is a lot of studies. If you compare the compounded appreciations annually for different asset classes, the real estate stands at 8 to 10%, including rentals. Because of the recent surge, gold stands between 10 and 12 now. Equity markets will never be in 15. Highest was 18. So I would say 16. This is Indian markets. S&P would be 1% lower than India if you took off a 20 years block in the last 50 years, any 20 years. Now, the caveat is, or the rider is, that you should not be a businessman in real estate. You are not an insider. You are not a trader. You are a casual investor. I buy a flat, I give on rent. I buy a shop, I give on rent. Versus I invest in stocks. I'm not talking of direct stocks, I'm talking mutual funds. A weighted average return. Now, if the weighted average return between FD or the real estate is 6-7% per annum, you see how much wealth is not being made by a wrong investment. With the power of compounding. Right? Now, what these youngsters should do, I have practiced this and talked to many youngsters, and they are very keen to talk to me again. भाई मेरे father ने तो 10 showroom ले रखे हैं. There is a rental of 40 lakhs a month, and is very happy. But what you are saying doesn't make sense. We should sell all and put money in the mutual fund and make much more. Now, how do you plan your estate? That's the next question for seniors. I'm just trying to advocate that the people at home who are not educated, not getting very good salaries out, and are willing to concentrate within the family, extended family, close friends, how they can make money, how they can show an ROI of their own efforts. They sit down on the portfolio, rework that portfolio and do it. Now the next question is, suppose somebody already has 20, 30, 40, 50 crores of assets in the family, and father says, I will retire, so I am very defensive. I don't want to take a risk. This happened with us. A friend of mine retiring 10 crores in the bank. He says, I want to put everything in debt. I said, why debt? He said, no, I am going to retire. I am 60 now. Why should I take risk? People say, don't take risk after 50, 60. So after cup of tea and some discussion, I asked him how much money can you burn in your lifetime on yourself.
Okay.
He said, if I have 2-3 crores and as you say, you put it at 12% annual return or
Yes.
maybe lesser, I think I should be fine and should be 2 crores still left when I leave this world. I said, then rest, what happens to the rest of the money? He said, pass on to my son. I said, then who should be deciding today? You or your son? His risk appetite should apply on the asset class
Yeah.
or the decisions
Yeah.
that you make, not your asset. Similarly, 20 years down the line, your grandson should decide, because if at all he will lose money, another important observation that we have is, it's a fact that wealth will never be consumed by the person who has wealth.
True.
He will not consume and go.
True, true.
He will leave it.
Yeah.
And next generation doing better than the previous generation because more opportunities available. So wealth accumulatory hai. So what are you doing? If you can sit home, just churn your assets, put it to what is best for the family as per the risk that individual wants to take,
Yes.
who is going to be beneficiary, you can actually grow the wealth from, say, let's take an example, not doing anything with 50 crores and ending up with 70-80 crores, or doing something and making it 200 crores.
Yeah.
The opportunities for youngsters tomorrow will be to buy out businesses with a check and instant money. Instant money is all liquid money. Real estate is not. We are sitting in this India house. Can you sell it in 5 years? Can you take possession and recover money? No, you cannot. You can just get money, but you can't get replicated. You can't sell.
Yes.
Right? So there is a lot of problems that inherent with the real estate, apart from the returns that you have.
Yes.
Because people have no knowledge, and conventionally people are very, very risk averse. Because especially people who came from Pakistan or even otherwise not doing well, families migrated from to the urban areas in the last 40-50 years. But second generation, third generation has that liberty. Chota bada ghar to hai na. And families are nuclear. There are not 10 people in the home now. It's 1 or 2 children. So they should concentrate. We have one such case where we have trained one educated lady. She transferred from Gurugram to Chandigarh. And her father's objective only was कि यार इसकी मैरिज करनी है तो घर में रहेगी तो रिश्ता ढूंढना आसान रहेगा. But we trained her to become a portfolio manager. I told her that don't look outside your father's kitty because वो बनिया family industrialist हैं. तेरे in-laws भी ऐसे होंगे. And you will have so much to manage that you will give your own ROI to them. Even if you get the distribution fee part of us from, you will still have a check which is higher than any salary that you will get. And she's proved it. So this is just one example. So we can do all that. So retail investors come in different form, shape. Only thing is we need to talk to them, educate them, let them become investors and trade is much later life.
Yes, that's true. Because that mindset, because if we think that okay, investment karni hai, the property, gold, that's the only options which come in, or FD.
I think you need to talk to a good advisor, and a good advisor can be who can align with your goals.
Yes.
Who thinks about you more than self, whose income is not fully dependent on this business practice of wealth.
Yeah.
Like our company, we are fully dependent on our brokerages that we do.
Yes.
Wealth comes secondary to us, but now we feel that we can do it without any extra expense, and we talk to people and we can actually help people either become entrepreneurs in wealth management or as investors with us and grow, and we are happy to do that. So choose your advisor properly, I would say. We have a full lecture on that. Do's, don'ts, what matters, what doesn't matter, and then you choose. And we do planning, the diagnostic part, the planning part, the draft, the tax efficiency free of cost. What we do is that if you come to us for execution of that plan, we'll get some money from the manufacturer like AMCs. We don't come, it's fine.
Yeah.
Because we have added value. Our main purpose is that we know that you're losing money because you're not doing. Like as they say, if I do this, this is the cost. मुझे सुबह जल्दी उठना पड़ेगा, ये करना पड़ेगा, वो करना पड़ेगा. I ask the ulta question. What is the cost if you don't do this? That's a long-term answer. So same here. If you don't start early, don't plan properly, don't learn the art, don't go to a right advisor, then the cost is too high.
Yes.
So why start on your own without any preparation?
I was just about to ask you a last question. You already answered it, that if one golden rule you would give to a retail trader and a retail investor, that they don't burn their money. So this would be that only, I think.
Retail trader, are you mentally and by qualification and by environment trained to be in that cockpit and fly the aircraft? Do it. As an investor, don't have to worry too much. Find a good advisor and start.
Great. Just to add one more question, since your insights are like so valuable for us and very informative. So just to add one more question, like in today's market scenario, people who are starting today or like 3-4 months back, to say Mr. Trump being here, what do you want to advise them? Because we've been always like in that hope that markets will be stable, but the conditions are different at the moment. So what would be the advice now?
A little bit difficult for people now who started now and there's a lot of uncertainty. I mean,
Yeah.
you were saying they're first timers coming now after Feb this year and they're trying to. Now, see, if you really see if there's a person who is little educated, who is understanding what trading is, for him doesn't make a difference.
Okay.
Traders still making money, right?
Okay.
Because disciplined ones. But somebody who's not trained and so much of volatility, so much of uncertainty, so many dimensions, obviously he should not trade. But of course, then if he still wants to do it, smaller money and good stop losses, right? Or an algo system.
That would be the sustainable part.
Still, right?
Yeah.
And for the investor, investor has to keep on investing. SIP defines that only, that you please put on money at all ups and downs and it will average out. The only thing is that you will not ask that, I might still answer that. When you exit, when your goal is approaching, you must in cash before any fall happens because your value can be lost.
Okay.
Right? Because, so we always have timing of 6 to 8 months, 12 months before that goal, some reasonable amount start being shifted from equity to semi-equity or to debt. So that is available when you need the money, right? So there are different strategies to do that. But I'm just saying that for the investor, bear in mind that even if he's putting money, which being averaged out, some people will say that whatever tomorrow market falls, then what is the advantage of averaging out? So I'm just telling that there is a strategy to move to more safer and liquid funds before you approach that goal.
Okay.
For an investor, it has to be long-term perspective, right?
So thank you so much, sir, for this valuable sessions. It was so informative, and trust me, I feel people listening to this podcast will be able to understand how investing, how trading in today's world, if you've started now or 3-4 months back or actually have been in the system for long, will help. And I would really like to thank you again and would really want you to educate our audience in the future too, as we spoke about magic of compounding, or there's so many topics related to the current market scenario. So thank you so much, sir.
Thank you, Noor, and I hope that people benefit and look forward to certain discussions. We are available offline, online. Also, our teams in Delhi,
Yes.
Chandigarh, Mumbai, Ludhiana, they are available. We are pan-India, so people are available through our B2B original offices. So we are covering 350 cities and a network of 1,500 business partners. So happy to help people, and that's a benevolent act we'd like to do. Thank you.
Yes.